Testing. All right, thank you. What's up, everybody? Getting things up and running on TradingView right now. Okay. All right, that looks good. Good. Hey, Sirhan. So I actually do it in 3 places. I'm doing it on Discord, TradingView, and YouTube. Let me get some links out there. Ping people. Jen, say something in Discord or Sherpa so I can make sure I'm hearing from there.
Yo.
I hear you. Good. Thank you. I have to set my, have to change around my stuff every time. Voice meter. But if I leave it on too long, it messes up and I can't hear anything. Okay, got that link. Yeah, TradingView has its own. What do you mean trading has its own temporary chat for streams? Hi, Judy. Can you mute yourself? I'm hearing your stuff in the background.
Sorry, how do I do that? Just a second.
It should have a little. Are you on your phone? There you go. You got it.
We call it earnings exchange. We're doing it even on a Fed day today. We're going to take a look at the story and the trade and what the setup is on three key names that are reporting after the bell. Today, those names are Qualcomm, Robinhood, and Roku. All right, first up, that is Qualcomm. Shares are down 36% this year, on pace for their worst year since 2001. This despite the fact that Qualcomm has beaten the street on earnings for 4 straight years. Christina Partsinevelos has the story, and Nancy Tangler, CEO and CIO of Laffer Tangler Investments, has our trades. Christina, good to see. It's like Semiconductor Week. We had Infrastructure Week. This is Semiconductor Week. I don't know what that weird little Montreal thing you just did was there with the dance. But
it was an excitement dance because I get to talk about semiconductors, make it exciting for our audience.
Guess what? You also get to talk about them, not just to boot them. All right, Qualcomm, what's the setup?
Okay, let's talk about Qualcomm. You just mentioned the stock was down, what, over 35, 36, 37% right now. A lot of that has to do with the fact that it is highly exposed to the consumer end market. Two major factors for this report is that you are seeing a slowdown in the 5G adoption. The second major factor, too, is China's shipments have declined. These are smartphone shipments down 19% year over year for the September quarter. So that's not good for the company given its exposure. We talk about some positives for the company. The fact that Qualcomm going into 2023 has Samsung as one of its more high-end customers. It announced that it will be making the chips for its handsets to its
The TV stream is echoing.
Reflected in the March quarter. And then Apple, still a big question mark around that. Are they going to still be customers? Is Apple going to continue into 2024 with Qualcomm chips? If so, that could be a positive. And then the third positive trigger for this company is
you may have both open,
segment,
Sir Ham. You may have YouTube and
0.7% of Q3 fiscal revenue. The company's narrative is that this is going to be a major driver, that they see this market as a $100 billion total addressable market TAM by 2030. So definitely some strength there. But that's long term.
Oh, you hear the echo trading view? Okay, hold on. Let me pause the thing there. All right. Are you guys getting echo now with my voice? Testing, testing, testing. I guess, yeah, my mic might have been... Okay, so the mic must have been picking up the... that's usually not a problem with voice meter. Oh, I know what it is. Hold on a second. I bet I know what it is. Let me restart my Thinkorswim. So it was the CNBC that was echoing. All right, let's do another try. I'm actually going to turn this off.
I think you want very specifically selective about which companies you
is that
own
echoing
in
now?
that space.
Well, so listen, I get the reference. I hope it's not the Queen Mary, which has been sitting rotting in port for 30 years in Long Beach, wherever it is. Nancy, Christina, thank you very much. All right, next up is Robinhood. It is riding a 4-month stock winning streak, but like so many others, still down 34% of the year. It's still not profitable. The street expecting another loss for the third quarter. Kate Rooney has the story, like permanent losses forever, Kate? Like any sign of profitability?
We'll see. That really is one of the big focuses. When is this company going to be profitable? And the markets are down this year. We all know this if you've been watching CNBC. People are trading a lot less, and Robinhood tends to make money when people trade more, so the expectation is pretty low for trading volume, which is still really where they make a bulk of their money. Not much you can do about that, but for Robinhood, it's more about what the company can control. What levers do they actually have? And the big one is cost cutting. They've already done layoffs. Wall Street's looking for some more cost discipline, especially in guidance, so any commentary around that. Also watch net interest income. So Robinhood makes money on customer deposits, and rising rates tend to help with that.
We will see it on the charts either way. We'll see it on the charts when it comes out. The problem might be with OBS and how it's picking up things. So I'll fix that next time.
Yo, by the way, it's all good on Discord. So if anyone on TradingView wants to hear it clearly, they can join the Discord, right?
Yep. Hi, Aimer. Let me. All right. All right. I'm gonna get a drink. Let me turn off this. All right, I'm gonna turn off
From
my.
a year ago, and really this started to turn around when the Fed started raising rates. The path to profitability is
You
really
guys tell me,
hard
are you
for a lot of these
getting
money
echo
losing
from
companies, but
CNBC
if
still
you've seen
now?
on earnings calls, the companies that are getting rewarded are the ones that are doing layoffs, that are scrapping some of the more ambitious plans
speaker's
and
off.
getting more focused. You can see that in PayPal, and that stock has outperformed recently because it's got this activist investor, Elliott, coming in. So for Robinhood, it's really about, can they take this seriously? Can they pull back in a time where their core
I
business
don't like
isn't
using
really
that
making money? And
Maybe my
again, what
ears
is
feel
this
really
path
hot and
to
sweaty.
profitability?
It's like that bridge behind you to Treasure Island. I think that's what that is.
This is the path.
You're still gonna echo?
The
Okay.
bridge just keeps going.
It's
It's
not.
on this side, right?
That's it.
something
There you
On this
go.
side.
My dad was stationed there in the Navy. My dad was on that island in the Navy.
Something I'll have to troubleshoot later. All right. We got 23 minutes. I'll be right back. My voice is coming through good, I assume. I'm going to start drawing up levels. We're getting close to it. We got 20 minutes. By the way, I'm streaming on YouTube, TradingView, and Discord at the same time. Interesting. Got a little pump coming on right here. All right. Let's put everything in context. So, the daily of the S&P 500 index is really the story. So, price came up to the retracement level of the high that was set in August to the low that was set in October, and it's come back 50% at this point right here. This is following the spike on the daily, which is really kind of the story. I mean, this right here defines the bottom, if this is the bottom. And so really the key resistance is the halfway point of this move down, and it double topped out Friday and then this week, and then that was what yesterday's trade was based on. So ES and NASDAQ both sort of double topped out basically yesterday, and now S&P 500 has come down to its 50% of the move up from last Thursday. So that's the support right here. In fact, it's real clear to see where it's stalling out and fighting. So we're either going to come up from here, or if we take out that low from just a few minutes ago, that's going to be interesting, but it's just kind of hanging out there. Let's see. So NASDAQ, which I really prefer to trade, where are we here? All right, so this is breaking down a lot. NASDAQ is definitely the more bearish. It did not quite get to its daily 50% level. So yeah, NASDAQ is definitely the bearish one. It missed this by, what, about almost 7% or up here? Yeah. And then it's already breaking down from the last week's action right here. So if we're going to short anything, NASDAQ will be the one to short. If we're going to long anything, it would be the ES. All right. Yeah, NASDAQ's already given up its support right here. I forgot to share my thing. I'm actually not upset about losing CNBC because it actually distracted me last month because it was delayed by 5 minutes. I was waiting on them. That's the trading view. By the way, guys, if you got questions about stuff, just post in the chat. I'm here to talk to you guys. That's why I do this. I don't charge for any of my super secret courses or indicators. Even though I know Aimer does.
Yo, you got me laughing. Hey, guys, if you wanna catch the bottom, buy the tick. Join North Discord because I called it in his Discord.
Yeah, I was about to say, what are you gonna shill?
Yep.
You gonna shill your thing?
Jesus. Wait, why did you stop the stream? The CNBC?
Because it was echoing in TradingView, and because last month it distracted me because it's delayed by 5 minutes. So I was sitting here listening to CNBC, expecting, them to say, okay, here comes the number, and I should have just been looking at the chart because there was a great setup, and I caught it a little bit late because of that.
Fair enough.
So CNBC is generally, it will misinform you when it comes to markets.
Yeah, what you eating over there?
Peach.
Ooh. Wait, you're from Georgia, right? I have got
Yeah,
some.
we're known as a peach state, but really most peaches are grown in California and Florida.
Yeah, if you go to Italy and stuff, like the food just tastes better. Everything. Smiles and stuff. So I can imagine the peaches. Yeah, the peaches
Well,
is
like
really good.
subtropical. Many years ago, I was there. It was like Florida without air conditioning.
Oh, jeez.
I don't understand why Europe has been around for thousands more years, but they still haven't gotten air conditioning yet. Like, how do they call themselves civilization if they don't have it?
It's cold. I find out it's freezing. I know, it's always great up here as well. It's literally always great. Just cloudy, rainy, cold.
That's Britain, right?
Yep. You should come.
I need to. I do. All right.
I'll show you
Let's
around.
see. So let me mark off. This is where it gets a little bit tricky. I mean, here's the high of this downtrend, basically. I'll mark these off just to have them. It's interesting, this 5-minute breakout right here from the 8:15 news. That's actually working and live still, this breakout right here. But I doubt I would have taken that because it's right there at that support. In fact, when it finally broke this level right here, that's where it actually came and held out. So let's see, what could I have done here? Again, I've been really working on trying to get myself comfortable with playing spikes as breakouts. So basically, I ideally want a risk of that much, and then I'd want like 1.5 to 1. So, I mean, that's why I don't like breakouts, is things like this, because now you come into news and there's really not much you can do because you don't know which way it's going to go. 12 minutes.
See, today I came in with the aim of just holding a runner in any direction. Because why not like this? It's a coin flip.
So are you short?
Long.
You're long. Okay.
Yep.
From where?
Like literally bottom tick. Around I think 11,200. That's no.
On the Nasdaq or
yeah.
the ES?
Nasdaq.
Okay.
What do you think of the correlation right now? Is it all bullish?
Well, Nasdaq's more bearish. It's being dragged down by tech. So, I mean, in general, if you see a short setup and if you see a short setup in both of them, I would go with the Nasdaq short. If I see a long setup in both of them, I'll go with the ES long. Let me get myself set up in just such a way on the trading platform. Okay. So what I'll be looking for is a spike. And that could happen any number of ways. Actually, when was last week's FOMC? Last month's. Hold on.
Jim Craver.
So let's use. Hey, okay. In OBS Studio, mute. Sorry, I'm just saying this. OBS Studio, mute the stream audio input. I'm gonna play around with it because I finally got it working where I'm using OBS to send to multiple sources. So that's an accomplishment as opposed to last week. I'll get that working eventually. Let's see. Biggie Datus. Can you tell me about what I do, what I trade? Well, I'm a professional trader, and what I do is I look for opportunity. And what I trade is mostly, day trade futures. I swing trade stocks, and I used to do crypto, but that's been pretty boring. And yeah. I'm on Discord daily. I stream every Friday at the close. Well, most Fridays when I feel like it. And yeah, I might start doing. Folks have been bugging me to try to stream every day, but the thing is, most days don't have a trade, so it's not very like if I was a scalper, it'd be a lot more exciting. But most of the time, I just sit here and I watch and I research really boring stuff. And so that's good trading for me. That's my style. I look for opportunities, and we very well could not get an opportunity here in a few minutes. But what I'll be looking for is some kind of a price swing in one direction, and then a snap back to the other one. So, FOMC last. Where was the last FOMC? Was it in September? I don't see if I'm looking back in October. There were FOMC meeting minutes. Yeah, I don't think that we had a FOMC last month. All right. It's got some kind of a spike signal. Let's take a look at that. No, it's not. It's at that 50%, but it's too early. Too early. Clean that up. The price action coming down right here is not really filling me much. It's not really inspiring me. Because what I'd like to see is a consolidation going in. Ooh, yeah, that's a pullback to this level. It's just too early. I don't want to take that. Don't want to take that. This is the key level though. $112.70.
Yo, I'll go a question. That's fine. So you trade a lot of breakouts and post breakouts. What do you think of looking for confidence around like volume or momentum or like pretty much using other stuff for your own bias?
I got a brain about this big.
What?
I have a small brain with ADD that's been ruined by the internet. I can't look at very many things.
Oh, fair enough.
I mean, a lot of people use them successfully. It's just that, like take yesterday, for example. Did you watch my video that I made?
Oh, yeah.
So I detailed it out. Like, I didn't need volume. I didn't need all that extra stuff. The opening price action was all I really needed to look at. And the reason I don't use volume is because that I really cut my teeth on Forex a decade ago. And then I started trading crypto. And with crypto, all the exchanges are, disjointed, and so there's really no need to do that, really and truly. Hold on a second.
Fair enough. I mean, it could be distracting sometimes. So.
chat ready. On. Okay. All right. Medi Litecoin. I'll take a look real quick at that. Haven't looked at Litecoin in a long time. Also getting a little pop right now. I mean, we'll see what this FOMC does. It looks like everything's kind of trying to rally a little bit. A little bit of FOMO for the FOMC. Let's see. All right. 4 minutes. This spike right here to the level, if I were super aggressive and I didn't know better, as in didn't know better than to put on a trade 5 minutes before an FOMC announcement, then that would have been the trade right there. And you get a nice, good, wide range to get back to the bottom, and it's well defined, but we got to wait and see. I'm going to try to focus. I'm just going to focus on the NASDAQ. I could watch multiple things at once, but we shall see. Bitcoin's moving down a little bit. It's interesting. These are not quite correlated. Well, they are today, actually. Bitcoin, they're still correlated to an extent. The morning session was pretty much the same, but a lot less volume. These bars are really, now this is just the Bitfinex exchange that I look at, but these bars are very, little gaps in the bars. Nobody's trading Bitcoin right now. Very low trading volume. 3 minutes. I'm going to get hold on. I'm going to get CNBC up. We'll listen to it even if it does echo a little bit. I might actually play around with it. All right. 2 minutes, 1 minute. 1 minute. Right now it's looking bearish. That will be my initial thing that came up to this. Let's see. I'll do my refresh here. Are they going to raise? Oh, I should have done a poll. It's too late to do a poll. 30 seconds. What do you guys think? What did you think? What did you think before the meeting started? The forecast is 4%. That's a 0.75% raise. So we shall see. That's what the market's pricing in. Is a 4% raise. 15 seconds. If it comes in at 4%, I don't expect much of a movement because that's what the market's priced in. All right, here we go. Up. Yep. See, if I had taken that short, it would have been stopped out. All right.
Bridge.
Yep. That's why you don't trade before it. You were a long aimer. Oh, look at that.
Yep.
See, that spike would have taken out anybody that was short here. All right, let's let this 1 minute. Oof. Yep. So that's what the market priced in was a 75 basis point. So I don't expect any long-term movement. This just looks like a thin order book clearing out. See, now you have a spike to the downside, and yeah. All right, let's see what everything else is doing. See, if you would have taken any trade, you would have gotten stopped out here. Dollar yen, the dollar yen.
Sorry.
So the dollar yen did an interesting little spike up right here. All right, we're just gonna have to wait and see. I'm not gonna chase this.
I was going to ask, did they announce anything, or was it just?
Yeah, they just announced what was expected, which was a 4%, and it's looking like, because it came in as what was forecasted, that market's seen as bullish. But that's a big jump right there. I did not see an opportunity. Like I was saying on this one, where if, you know, we came up to this level here, so boom. Oh, so you got in from the bottom there on the NASDAQ, did you, Amer?
Yep.
So you came in long. Did you stay in it?
Yeah. Run. Yeah.
Good job. Good job.
Now I'm questioning if I should just left it all.
Huh?
Never mind.
Well, don't question yourself. Just pick a target. Just pick a target.
This is like Vegas for responsible people.
I don't like that analogy. I don't like the gambling equivalency. I prefer to call it speculation.
Yeah, I would say only today. Like if you try to predict the news, it's pretty much gambling.
So on crypto, on Bitcoin in particular, I've been watching this setup right here where you had a double top over the weekend. I still want to see it. If we're going to go higher, really the defining level on Bitcoin is to break 21,100. So this is actually on the 30-minute. If this I'm going to wait for the 30-minute bar to close. I always wait for a bar to close. But yeah. That's still not a good trade. I don't like that. I don't like the risk reward on this. But yeah, so for Bitcoin itself, you now have it's now defined itself. So breaking above 2100, 20,100, and then breaking below the low of this news announcement here, that's probably going to define the trend. Looks like we're getting a little pullback now too. That's the, yeah. Gonna shift up to the 5-minute here. I didn't break anything there. I think you just had to be long going in. But man, if you would have had your stop really tight down here, you would have gotten stopped out. So this right here is a bullish spike reversal because it came through, broke out these lows and wicked down and reversed back up. I wouldn't want to take this because so much is already gone. Basically, what I would have liked to see was coming back to, like, say, right here within this first bar or second bar, pull back and then take that long. But since it's already come up to almost a 2-to-1 from that, if it comes back here, now you're getting in danger territory, but just giving it all back up. That's my thought process there. Ethereum spiking. Let's see on Ethereum. Meh. Again, if you wanted to take a long and have your stop below this little spike down on the news, that's a good way to define your risk. But I don't want to jump this right now, but you know where your stop needs to be. It's below the low for all the things, unless you're trading the dollar, like the dollar yen, and in that case, it is above the high. So yen is what I've been watching. This is, I think the yen's going to start pulling back, honestly. I mean, again, it's basically made a spike high here back last Friday, or the 21st, yeah. And yeah, so that's what I'm going to be looking at there. I think a lot of people are long yen now just to be contrarian, but you got a good reason and a good stop right here. Anybody in the chat have a good trade that's working for him now? Chase. Nah, I had a good day yesterday. I'm not gonna invalidate it chasing. Yeah, NASDAQ turning positive. All right, so let's take a look here. So from yesterday's high down to here, here is our resistance for that we're looking at. We've got some validity there. Let's look at that. See what we're going to do as we fight that level. The leg down. ES, again, ES has already broken its resistance up, closed above it on the 5-minute. The NASDAQ itself is fighting this level right here. But we don't have a TS red line recapture just yet. But notice how price is starting to stall out at this, like basically we have the high from yesterday down to the low pre-news, and this is basically a defining trend right now. And right now, right this level 11,406.5, we're starting to get starting to resist it. So what I want to do is be patient and wait for this Tinkinson, which is the 9-period moving, excuse me, not moving average, it's a medium. It's from Ichimoku. See if this can rise up, maybe get a little push down and then a pull back up, define the risk by this little range right here, and we might be looking for a short. If I had to put a narrative around why we popped, it's simply because I think people were betting on the rate increase being higher, maybe. But it really just came in as expected. Now we still got 11 minutes, there's 21 minutes until J-Powell's talks. And then he will talk. And historically, well, I don't know statistically if he talks, it goes down or not. But things can move, and then when he stops talking, it can reverse around the other way. So, all right. I really want to see this bar or the next one close below this range right here. Give me a bar close. All right, so we got to open below the Tinkinson. I really want to see like a bar close, a 1-minute bar close outside of this range. That might have been it, but that's playing tricks on me. Because I need this, my rules say I need to let this bar close outside. And this is just an open. All right, let's see if we can get a close here. That's a nice little push down. Got it. All right, let's see if we can get a pullback. This is worth a trade. Go a little stop there. Let's see. I wish this was a bigger move up because I really want to take it down to there. All right, let's see if we can get a pullback to there. This means I got to take it all the way back down past. Hold on. That might have been the aggressive one right there, but it didn't fit my rules. Let's see. What are we doing on the ES? ES is doing kind of the same thing. If I want to short, I want to short the NASDAQ. All right, let's just be patient. Don't like the risk reward so much. 113.97.25. 113.97.25. 113.97.25. Okay. All right. Not a big fan of the risk reward because I got to take it all the way back down, but anything can happen. All right, we'll go with that. I'm just going to give it a break of the high. Just going to give it a break of the high there. Tray station to TV, I could. But then that would mean I had to change what I do. It's fine. It's fine for me to just input the order manually. Why don't I save on commission fees? I think I pay like $1.50 per contract on futures. No, it's Thinkorswim through TD. Yeah, TD, which is now Schwab. When I first started, old man Wes here talking, it was $15. Maybe you're right. Maybe it's $2.50. I think it's $1.50 for options. You're right. In general, I really feel that if you're worried about commissions, you're trading too much and with not enough profit, but that's just me. Yeah, I'm getting $5. So I got to make a full, point, I guess, on micros or whatever the minis, but it's not that bad if you're doing the minis. Yeah, exactly. Profit, what's that? Now we wait for J Powell to run his mouth. Let's see. Anything you guys want to look at? I don't want to stare at this thing the whole time. What else should we look at? Bitcoin. What is the coin of bit doing? Doge. Yeah. I don't want to look at Doge though. Don't make me. Okay. Dogecoin. Dogecoin, because Elon took over Twitter and he posted some memes, it's gone up. Did this start when Elon took over Twitter? Is this going to be one of those things where I regret not buying Dogecoin because it was obvious that once, you know, the Doge master bought Twitter, that everyone was going to take that as a rallying cry to pump this thing up? Shiba. I'm done with that too. I mean, these things can only function in the world that we used to live in of 0% interest rates. You know, a short is kind of okay because you could, I mean, basically you have this this Saturday high that's kind of your defining level, but yeah, what are you trying to do though? What are we trying to do? We're trying to make money? Arbitrage short? Okay. Yeah, exactly. You know, I wish they would turn on the money. I actually thought when that news about Biden came out, where they were talking about, you know, going to, what was it? The economic advisor was going to start making a recommendation for policy to the Fed chair. See, a lot of people don't know this, but the President of the United States appoints the Fed chair and I think 2 of the vice chairs, and then he nominates them. And so basically they serve at the pleasure of the president. So essentially the executive branch has the power over the currencies. So it's not really obvious that that's how the US dollar interest rates are made, because the Fed's supposed to be independent, but one of those little quirks of power. SPX is dumping. I watch futures. Yeah, I mean, you see basically the same setup going on here, where you had a little stall out, followed by the break below, nice little pullback to the 50%. I mean, essentially, this is what I call like a, well, actually, bad MFEs has started calling this, I think, the TS recapture. I mean, that's a good word for it. I haven't really come up with a name. I was calling it the counter yeet, because basically what you have here is a yeet. So that's a yeet. And then what you have is it stalls out, gets back below this 9-period median, which is the Tinkinson based on Ichimoku, which is right here. Because essentially that is the 50% of this first little push down, boom, boom, boom. And so now you have a counter trend or a counter yeet to go the other direction. And what this lets me do is this lets me have a well-defined trade, because ultimately you're playing this as being the top. So your stop just needs to be above the high, and then this gives you your entry. This is your risk. And then you should be able to take it down for profit. That's the gist of it. So, well, we shall see. Let me clean this up. Yeet. Slowly, 10 minutes until he starts talking. Ideally, what I want to see is it pull back to at least 50% of this move up. That would be ideal. And I wish that I could have gotten a 3-to-1 to that point with a stop up there, but to get my 3-to-1, I got to wait. But right here is the point. If we can touch this in the next 10 minutes, it might be good to shave some off. just before he starts talking in case he says something crazy. I think I like counter yeet better. That's going to make for more meme thumbnails. All right, let's look at some other stuff. What are the stocks I care about doing? Most stocks are up, given that I'm out of all the crazy tech stocks. Kroger's up a little bit, Jen. BMY, UNH, FE, UNP, Waste Management. It's really just tech. Hold on a second. Let's take a look here. Okay. So, in the NASDAQ, Airbnb, did they have earnings today? Man, Airbnb is really hurting. A lot of the people that have Airbnbs are really hurting because I think they overcommitted themselves a little bit. People are also getting really pissed off at fees, cleaning fees, and a lot of local governments have caught on and are now charging taxes. Airbnb is not really what it used to be. You used to be able to get a whole house cheaper than a hotel, but now it's the opposite. Need some music. Problem with music though is that it's going to get demonetized. How did they do it on Twitch where they have music? How do you run music on a stream? See, my thing is I work in quiet, and so it's just not natural for me to have music. But if people would like a little bit of music rather than hear me drone on, that's fine. I understand I'm odd. It's like right now, I've got this sun in my face, and everyone loves natural light, but you can see how it's like blinding me in my eye. One second. Let me fix. Oh, Discord's not showing my webcam? Oh, I wonder if I can use, I don't think you can OBS to Discord. But the thing about webcams is it can only ever go out to one thing. So that's unfortunate. I'm just going to hang on to this come what may. That's my decision here, even though it's come back up to touch my break even. Let's go through here. TLT. Man, people that have bonds. Whew. Yeah. Yeah, I bonds. I'm talking about like the other bonds, like the Treasury bonds, not the inflation bonds. Mm. 3 minutes until J. Powell starts running his sweet baritone voice. And we're right back to basically the start. Oh, my new place, once I can finally get it remodeled, my office is going to be in a very interesting room where I have light coming in just the ceiling, kind of like a skylight. And it has no windows. Perfect place. Are we going to get stopped out? Didn't even get down to the 50%.
We're saying, as everybody's been saying, anything that they do in the way of slowing down is premised upon inflation cooperating, and we have yet to see that. So in that sense, we're data dependent, even if they're not saying we are data dependent.
So, yeah, it does feel that way. It feels like they're saying
We're out.
we recognize, acknowledge the need to watch and see what the effects of our moves have been, which is then just one sort of half step away from saying we're cognizant of the idea of the fact that we may have to take our foot off the brake a little bit at some point before we get to that point of 2% inflation.
That's right.
It's just going to take my stop and
We know
go.
what's going on with housing. We know they've described their campaign as front-loading the tightening process, and if they're front-loading it, then getting to 4% in 7 months or 8 months seems like that's a pretty good job of front-loading. So
Are you in TradingView? Are you guys still getting an echo, or did I just fix
I think we got
it?
used to a Fed that was sometimes looking for a plausible excuse to go easier. That's not this Fed. They can't operate that way. They can't afford to when, you know, inflation's running at 3 to 4 times their target.
All righty. Well, let's keep talking here a little bit while we wait for Chair Powell, who is probably going to come out here in just a couple of seconds, because we are at 2:30 p.m. and he is
Okay, so it's echoing on
very,
YouTube as well.
very, very punctual. I don't want to bring you into another question here and answer, Michael, because I probably have to break you off. The Dow right now is up 1.19% or 382 points here. Well, Michael.
Okay, how about now?
Absolutely, they started to respond to
Testing,
this, to
testing.
higher
Is
general
YouTube
yield
echoing?
levels, and also the fact
Just
that
when
there is a
I
savings.
just when I asked you, here comes the chair.
Good afternoon.
Testing, testing. Is it echoing? All good.
My
Yep.
colleagues
Okay,
and
I
I
fixed
are strongly committed to
figured it
bringing
out.
inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
So there's another little spike up there.
Without price
Man,
stability,
look
the
at that.
economy does not work
Ain't
for
that
anyone.
Bitch.
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy
I wanna
actions
try it
after
one more time
briefly
with the fake out
reviewing
there.
economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year.
Takes me out a second time.
Recent indicators point to modest
wasn't meant
growth
to
of
be.
spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable
114,655.
income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month
Stream's getting
over
blurry.
August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance.
Is it on
with demand
Discord getting
substantially
slurry?
exceeding
Getting
the
blurry?
supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above
Yeah.
our longer-run goal of 2%.
I think it's doing
Over the
okay
12
though on
months ending in
the other
September, total
platforms.
PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data
I don't really have a
again
solution
have
to
come in higher than expected.
That at this point.
Price pressures
But yeah, that's
remain
really the
evident
first. If
across
that's the
a
first
broad
time
range
that
of goods
Discord
and
is getting a
services.
problem, then that's not that bad.
Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates.
Yeah, it might be a thing with the server quality as well.
We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions.
I have been redeemed.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities.
They did try to
and
get me
businesses across the country.
They absolutely tried to get me up there.
Everything we do is in service to our public mission.
Yeah, where's Amer?
We'll do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Yeah, I don't know. Yeah, what time is it over there?
Thank you. Colby Smith with
Like
the Financial
5 hours?
Times.
No,
On
it's
the
just
need
the
to
evening.
slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and
are they going to? Apparently, he didn't say anything new, and it makes total freaking sense that we are now once again back down at right before the meeting because nothing really changed. It's exactly what the market expected, the 4% change. And so, really, he said nothing new. Exactly what the market expected, exactly what the market priced in. Meh. Big old meh. All right, look at this bouncing around here at that level. I mean, it's the high right here that I was looking at before the FOMC. This right here, I should have labeled this. Hold on, what is that again? This is me not being able. Okay, this is the broader scope. Yeah, this is the weekly 50%. So weekly 50%, which is basically where we started, and it's pushing above it. Nothing really changed. All right, you know what? I'm gonna trail this based on the Dickinson recapture. I'm just gonna be very rules-based about it. Either way, I'll have a good day. throw on Ichimoku. Make it the chart more confusing. Coming back up to that SKB right there. Just noticed on my trading over here. It's a nice little pullback right there. If one were aggressive, that is basically, yeah, that, well, I didn't quite hit the 50% of that. It's a good solid hit off that level. Is it going to hold that resistance? Ooh, coming back. That little ping right there was pretty bad. It was pretty hard. Actually, that closed above the Tinkinson right there. I'm missing out. All right. And out. All right. That I wasn't really. I was waiting in my head. I was thinking that we were going to get some sort of like this. The red line, the Tinkinson was going to, flip down. We get some kind of a pullback, and I could exit on that. But technically speaking, this bar right here, closing above the Tinkinson. I mean, that's really what I was looking for. That's the technical close above it. And then on this bar, you had that little inflection there. So, yeah. So half took down to here. The other half took down to about there. Yeah. So, yeah. So we gave up 52 points, 100 points. There's the pullback right there. And a little more optimal. We give up 100. We earned 167 plus 60. So 240. Oh, minus 100. So about 140 points of NASDAQ. And it's just going to boop, 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 boop. I'm cool. Let me do some logging. What I like to do now is log my trades in a journal to learn from my wins and mistakes. I don't think I did anything wrong in this one, actually. I think the lizard people just took out that first trade. But a clear head lets you go back in. FOMC yeeted, waited for it to consolidate, and then took the TS counter. I take that back. One of the things that I kept on talking about in this trade was how I didn't like the risk reward here, because I would have had to take it all the way back down. You would have had to have a stop above the high. And so I mentioned that hesitation about it. And so really, okay, I didn't follow my rules there. but that's kind of a, I'm very stringent about my 3-to-1s for the reason so that, you know, when I do take losers, I can make it back. But yeah, if I was just strictly looking for a good risk reward, I probably would have said no to it. Initially did not like the risk reward. Got stopped out, but it was a fake out. Looks like it's going down some more too. Probably didn't stop out that initial trade. Took the fake out spike. Yeah. I think it's just going to bounce around here in this range for a little bit. If people are playing in the range, this would be a good situation for them. Let's see. I had a alert for the ES. Okay, actually, let's take a look at this in the scope of things. Ooh, man, the S&P is really tanking now.
Rachel.
It's
Hi, Chair Powell, thank you for
basically
taking our
did the same
questions.
thing.
Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly for a long time thought that monetary policy works with long and variable lags. And that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the funds rate.
Yep, it's definitely leptocuritic.
And then that would affect economic activity and inflation. Now, financial conditions react.
So what does the percent profits look like split up like that versus being out completely? Are you recording this?
For a quarter of a century is in the direction
Yeah.
of financial conditions, then
This is being recorded because it's streamed.
because the markets.
Do you have ideas for how to kind of edit this up?
And
What is the percent profit? What do you mean percent profits look like split up?
Financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain.
Did I place any order? I did, Mehdi.
It would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to be.
I'm already out of my orders. Basically, I had 2 trades. I went short on this. Basically, price came up to a level I had previously identified. There's the little FOMC yeet. Yeet. By the way, that's what Zoomers call it when something kind of goes. Okay. Yes.
Under control
Zoomer talk.
because we don't tighten enough.
And price kind of consolidated. The reason I like this level is because this 50% level. Did I mark this off or did I forget to write it down what that was?
Higher potentially. So
that was the.
Sure that we.
Oh, that's the daily.
Don't make the
What is
mistake
that?
of either failing to tighten enough or loosening policy too soon.
Oh, this is the
If I could
weekly.
follow up, should we interpret
No, that's
the
not the
addition to
weekly.
statement to mean
Okay,
that
this is the
more weight
the
is
2-day
put into those lag
50%.
effects
So this
than
is
they
the
would have been
2-day 50%. So basically the retracement level from the high yesterday down to the low before the meeting,
as we make these ongoing
that was the level that the FOMC pumps it up to. Basically, the 50% of the movement from the week to date, essentially. And yeah.
But we will be thinking about them. But we won't be.
This is my weakness. I take profits too early.
Considering them, but because it's appropriate to do so.
This actually, to have held on to it, would have been
very
fine.
Premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about.
But yeah, so this one took me out right here with a little bit of lizard people stuff, and then I got a second spike indicator right here, which basically tells me, okay, you came up, you did exactly what it did to me. It took out people's stops, and then closed back within, meaning it was probably fake. And so that was a good opportunity for a short right there. Took it down to the 3-to-1, took profit, and then when it started coming back up here, I closed it out. But in hindsight, I was being a little too conservative, because now we're breaking the low. It's funny how it does that, huh? Man. I mean, I can't complain. Made money, but
consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy?
You know what I thought about doing? I thought about just walking away and letting it get stopped out.
At all worried that your
I say that almost every time where something goes, like just leave it on, get stopped out, because either way, if you think about it, I took 0.5 loss, 0.5 loss, like 0.5 risk loss. So
so we go into this with
like a full. How does the math work out?
And excess demand in the labor market.
So
see through many different things, and also
yeah, if it would have stopped out,
strong spending power built up. So
think about it this way.
It may take resolve. It may.
I have two contracts, so here I lose -1, so -2.
You see from our forecast
okay.
and others that it will take
here I go down 3, so I make 3 on a single contract. So that's +3, and then I lose 1. And so basically that would have been break even if I would have gotten stopped out. Instead of doing this, I was able to risk ending the day break even. I made sure that I banked something. What I've really started thinking about is sizing up a little bit differently so that I have 3 contracts. Be a little more nimble. But right now I just do it kind of like half and half.
For the couple of years after the pandemic, as demand increased and rates were low,
they tricked me.
How overheated the housing market was, prices going up.
But that's what they do. I mean, essentially,
conditions, that kind of thing. So the housing
price
market
comes up, makes you think that it's going to come back up in the range.
We're well aware that
but then once everybody's out, like me included, now it goes down to break the low.
We didn't see in this cycle the kinds of
all I ask for is perfection.
That we saw before the global financial crisis. Housing
so I'm going to be a little self-critical here.
Much more carefully.
I think the key thing is just to kind of set your orders, set your stops, and then kind of walk away. Because what I typically try to go for is what some people call home runs, but I'm really going for big wins, little losses. And you really just have to be comfortable where your stop is, because technically speaking, really and truly,
I wanted to ask about
you were okay with that stop to begin with.
You mentioned early on again,
so if it comes back and hits it at any point, doesn't matter. If it hits it as soon as you enter it, doesn't matter.
I'm just curious, to what extent you do and don't draw a signal from that? So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus?
Where is my middle finger
icon? What do you
icon?
see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that.
How do I feel about ADP? No, I'm not, Jen. I knew that was what you thought I was drawing there at the beginning. No, I'm drawing a middle finger.
Substantially exceeds supply. Job creation still exceeds, the sort of the.
What do I think about Disney?
The market. Where it is.
Oh, so, how do I feel about ADP?
That's the do we see
the stock or the fact that they released job reports today?
Softening is happening, and maybe that's there, but it's not. Obvious to me because wages aren't coming down; they're just moving sideways at an elevated.
The job report. Let's see. That's interesting. Now that you bring that up, hold on a second. So
we want to see
today
vacancies coming down, quits coming down.
The ADP. That's funny. So ADP releases a jobs report on Wednesday prior to the official U.S. non-farm payroll, and this is kind of seen often as a precursor to
real softening just yet.
This, but what's interesting is this is why the market went down today, because this is a better than expected jobs number. There's more people employed. In other words, unemployment's not going up. Therefore, that means the Fed can raise rates. So, what we're probably going to see come in here is a little change in what the forecast is. And the unemployment rate's probably going to stay the same. And if the unemployment rate stays the same or goes down, then I'd expect the market to fall further. So now, I think we may have some news tomorrow at 10, minor, but really Friday at 8:30 is going to be another day. Might even live stream that actually.
We don't want to see
if I wake up in time.
To go up. We just want them to go up at a level that's sustainable and consistent.
So ADP.
And we do think given
it's going up. Given the data that we have, I don't see any particular opportunity or pullbacks
without having to soften as much as history would indicate through the unemployment.
I mean, I don't see any opportunity here, really and truly.
Job openings declining. We think there's
my God.
room for that, but
are we really going down that much more?
That'll be discovered empirically.
So. Really and truly, if you think about it, like was it yesterday? Was the trade in here? Where are we now? I mean, take out all this FOMC stuff. Basically, the way to trade this week was get short up here. Yesterday at at the open on the spike, short the spike, keep some on. And then wait for this FOMC in here, put more on.
We keep close tabs
and then you could very well see us come back down to retest last Thursday's low for the rest of the week. I mean, it's looking pretty bearish because we basically came up to a resistance here today from an already bearish week and held it, and looks like it's going to break this morning's low. So. Yeah, this is some volatility brought on by the FOMC, but it hasn't changed the bearish trend.
So I guess it's clearly a time, difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine.
I think that's going to be it here in a minute. I'm hungry. I didn't. Eat my lunch yet.
Slower growth than we're used to seeing. So we're seeing.
So,
a strong dollar is.
Jen, what's your Friday looking like?
Countries, but we have it, and we take all of that into account in our models. We think about the spillovers and that sort of thing.
Woo, that's a lot of spikes.
We have a strong economy,
wow.
And we have an economy where inflation is
okay. Let's look at these first.
Core PCE inflation, which is a really good indicator of what's going on.
Your phone blew up too with alerts. Yeah.
5.1% on the 12.
All right, let's see here. All right, we don't need JPL talk anymore. So, yeah, everything from this last hour is going to start spiking out that I have alerts on. I bet. Let's see if there's anything particularly interesting before I close out. Adam 30-minute. That's a bear spike. Don't know if I really want to go on it or not. Yeah. Well, it was a very volatile little news event for all the things. That's kind of interesting. New Zealand CAD on the 30-minute. Is that at anything in particular? I don't get consistent Forex numbers. No, it's not a good level. What's Bitcoin doing now? Going down a bit? Yeah. Spiked out. Still, this bear trend from the weekend is going through. That bear setup from the weekend is still on. Yeah. All right. Going to start closing out. Thanks for joining, everybody. I'll see about streaming on Friday morning. No guarantees, though. But, yeah. Thanks for joining us. Hope you made some money. And we'll see you Friday for the live stream now that I've got this technology stuff working. Bye-bye. Trade wisely.